NVIDIA CEO Jensen Huang making some fresh comments this morning, saying there are, quote, no active discussions about selling the company's Blackwell chips in China, adding NVIDIA is not planning to ship anything to China despite a green light from the White House for its scaled-down H20 chip. Huang's comments coming after the information report that U.S. regulators are blocking NVIDIA from selling other versions of its scaled-down AI chips to China. And then in a statement, NVIDIA maintains its market share in China remains at zero. Just your take on these comments, especially after just yesterday, he said China is on pace at least, or just nanoseconds behind the U.S. on the backtrack, but first saying they were going to win the AI race.
Yeah, look, huge debate, Frank, over whether NVIDIA will be able to ship any of its chips to China at this point, with some element of confusion, specifically over Blackwell, its most advanced product. The state of play of this, NVIDIA has the H20, which is specific for China. It's a pared-back version of its key product, but export restrictions have effectively halted sales to China. But this year, the U.S. government indicated that it would allow NVIDIA to sell this to China again. But Beijing has been pushing local companies to not buy NVIDIA chips and instead buy domestic chips from companies like Huawei. Now, President Trump has previously said he could be open to NVIDIA selling a downgraded version of Blackwell to China, but he didn't discuss that at a recent meeting with President Xi of China. And Jensen Huang has clarified there are no discussions to sell Blackwell to China. In fact, NVIDIA is not planning to ship anything to China. So right now, Frank, it's somewhat of a stalemate. It's unclear what kind of market NVIDIA is going to get for China. But one thing that is clear right now is that China is heavily trying to push its domestic chips, particularly Huawei, and get local companies to buy those over the coming months and certainly the coming years. So it's potentially a moment right now where NVIDIA and the China market could be shut or extremely limited in the near future.
Interesting. And then NVIDIA, of course, this idea that you were ever going to sell Blackwells or apparently now even scaled down chips to China is kind of withering away.
According to the information, right, that the White House is suggesting that even if you have these scaled down chips, they're not going to be sold in China. Now, whether it plays out in finality like that, I mean, that remains to be seen. By the way, you also had the comments both this week on both sides of the Jensen Huang, China's going to win the AI race, backtracking in a statement, softening, I guess is maybe a better word to use, as we look at this arms race between the United States and China. China's going to make a lot of chips on their own, right? And you're going to have a debate over, do they really need NVIDIA chips? Remains to be seen. Well, we'll find that out.
Given Huang's comments about, I thought that they were walked back, to be fair, but this idea that they enjoy structural advantages because of their lower energy costs,
lower regulation,
looser regulation.
Brad Gerstner, the fire starter. Welcome. It's good to have you here.
It's great to be here.
So first, we should just lay the groundwork. You have been an early investor in OpenAI.
Right.
You're one of the biggest funds in OpenAI, substantial investment there. You had Sam Altman on the podcast this week, and you asked him, I think, the main question, which is you're investing $1.4 trillion on revenues of $13 billion, and he got very defensive. And I think a lot of people are reading into that thinking, uh-oh.
Right.
Why did he react that way?
And I think that's the story, right? Why are people reading so much into this? And I think we got to step back for a second. The Nasdaq's gone up 40% off of the bottom in April, right? Straight up and to the right. All these AI stocks have gone up to the right. The market was kind of looking for a reason for a breather. And, Sam came on the podcast. He was a little bit feisty. And he said, listen, we're doing more than $13 billion in revenue. And he just said in his tweet that they're going to exit the year at $20 billion in revenue.
It's still a fraction of what they're spending.
Correct. And, as I clarified in my tweet after the fact, when I said, it's unfortunate everybody focused on the feistiness and not on the substance. What Sam said multiple times on the pod and since is that he expects that they'll do over $100 billion in revenues in 27 or 28. And if they're doing that, and you spread the CapEx out. So we talk about $1.4 trillion. Half of that's going to be borne by their partners. So now we're down to $600 or $700 billion, and that's spread out over 5 years. So now we're talking $100 to $200 billion of CapEx per year that needs to be borne by OpenAI. Now, if they're doing $100 to $200 billion in revenue in 28, 29, then now we're in the zone of responsible. And so I think that the market kind of ran with this before it really digested the facts. I think as I sit here today, I don't know if it's going to occur in 27 or 28, but the trajectory is on pace.
To do $100 billion revenue.
Yeah, I think
he hinted that it could come in 27.
And this, by the way, is not just OpenAI. if you look at the news out of Anthropic, revenues
also invested in.
Right. Revenues are tracking well ahead of estimates. The Information has reported both of their internal forecasts, which are both over $100 billion by 28 or 29. But here's the point, Sarah. The market, the public market, does not have a way to play pure AI outside of NVIDIA. It is going to be watching, do the revenues show up? And if the revenues don't show up at the end of the rainbow, either paid for by a consumer or by an enterprise, then the AI trade in the public markets is going to have a problem. So the market is on edge. It's saying, show us the money. And when Sam, kind of hesitated or got a little feisty about that, the market, panicked a little bit.
Because that's the key question. And it felt like that he was angry for having to justify why they had to make money.
I mean, listen. The number of times I've watched the world's great entrepreneurs, Steve Jobs, Elon Musk, Sam Altman, get frustrated by investors asking those questions. I kind of look at it, I like somebody who's feisty and says, we're going to blow those numbers away. But at the end of the day, they have to deliver. And that's the point here. I think this week, what you saw across the market, as well with Sarah's comments about a government backstop, is everybody looking for an excuse to sell the trade, right? I think it's healthy. We're taking some of the air out of the bubble. There's a wall of worry that stands in front of us. NVIDIA now is trading below 20 times our 27 numbers.
Are you adding more?
Yes. I mean, NVIDIA is really
interesting.
interesting.
You've been in the stock since 2022. Do you have as much conviction now as you did then?
I would say that our position size in NVIDIA going into earnings was as big as it's been. Now, we rolled back our overall exposures at the end of last week because we felt like the market was pretty pumped up. We see the consumer weakening like everybody else sees. And I think the market could take a breather into the end of the year ahead of seeing kind of the next shoe fall in terms of Q4 earnings.
The other concern that I hear a lot and folks talk about OpenAI is the sort of circular nature of a lot of the deals that they're doing, that they are at the center of this very tangled web of deals where, NVIDIA, for instance, is investing in them, but it's also their big customer, right? They're a big customer of NVIDIA.
Correct.
And so if it doesn't work out, the whole thing collapses.
Well, I mean, again, I think, we try to simplify it down, to this meme. Because we saw dark fiber in 2000, so everybody's like, okay, this must be the same playbook as then. We must be overbuilding.
This is like Norton,
this is going to end up in a glut. I think it's far more sophisticated than that. The United States has a strategic imperative. We are in a global AI race with China. This is like the Manhattan Project. We have to build out compute. It's not only a national security imperative, it's an economic security imperative. And so I think this is, you're going to see compute build out irrespective of whether one or two of these companies slows down. We don't know yet who the ultimate winners are going to be here. We have hyperscalers that are vying to win: Meta, Google, Amazon, Microsoft, et cetera. And so I think it's early in the race. ChatGPT and OpenAI have extended their lead in consumer. Anthropic is showing real strength in enterprise. Over the course of the next year, we're going to get a lot more information. Are we on track for AI revenues, or are we not on track? If we're not on track, then the entire AI complex will trade down. If we continue on this line of revenues, then I think we're in a good place.
But you have confidence that we're going to get there. What would OpenAI be worth if it was a public company?
Yeah, I talked about this last week. If you look at the relative multiples, right, Meta came public at 20 times forward revenues. So, if you think about the forward revenues I just talked about, 100 billion in 28 or 27. I told Sam on the pod, I said 28 or 29. He said, no, 27. Okay, so let's say it's 27. They could go public as early as the end of next year or early in 27 on forward revenues, right, of 100 billion. At 10 times, that would be $1 trillion. At Meta's 20 times, that would be $2 trillion. So I think that's the underwriting that most of the investors in OpenAI are doing. They're looking at this at 500 billion, which was the last round's price, and saying, oh, this is a 2 to 4x over the course of the next 3 to 5 years.
Speaking of winners and losers, you are picking them in the public market as well. Meta still substantial chunk of your portfolio?
All of our position sizes have come down, Meta included. But, if you look at our top holdings, we have NVIDIA continues to be one of our largest holdings, Amazon, Microsoft, SK Hynix. So we're definitely leaning into the AI trade. But our overall exposures, I'll put it to you this way. At the start of the year, when the tariff imbroglio was going on, we were very small in our positioning. By May, when we were confident we were going to land the plane on these tariffs, we were extra large. And today, we're kind of medium. right? Because valuations have come up a lot on the AI trade and the consumer is fraying over here. So we need to make sure that we see those rate cuts, that inflation's under control in order for the macro backdrop to be conducive to the market continuing to work.
Do you still think that Meta's going to be one of the big winners? I mean, there's been a little bit of unease after the report. I mean, the market has treated them like an AI winner, but it's more confusing to me because a Google and a Microsoft already serve the enterprise on cloud. So where does the revenue generation come in on the Meta side for the more than $70 billion that Zuckerberg is spending this year?
The good news for Meta is they have one of the most prolific AI businesses in the world called the family of apps. Right, the greatest beneficiaries of AI, the recommender engines today, are TikTok and the Meta family of apps. It's prolific in its earnings power. So they're producing billions and billions of dollars of free cash flow. They're redeploying into AI. It's making all the family of apps better, right? The content's better. We're watching it more.
But that's not the ultimate end game, is it?
Agree.
Just ads?
I think the reason it's traded off is investors are saying, hey, you're taking all this free cash flow, you're investing it in AI. What's the new source of revenue, right? What's the new product? So I think there are a variety of things they could do. We'll have to wait and see. They could make a move into the enterprise, right? We could see them get into agents. We know they want to build a frontier model. We could see them get into the cloud game. You're right. They would be late to the cloud game if they got there. But I think principally, this is now the cheapest stock in the Mag 7. It's come off a lot from the highs. And I think because of some of the questions that you articulate. So I think if they just drive core earnings in their family of apps, they stay fit, right? Mark said flatter is faster, leaner is better, right? So if they do that and gross margins continue, net income margins continue to grow, I think the company will do great.
If the opportunity is not as big as you're projecting, as Sam Altman is projecting, as Jensen Huang is projecting in the next 3 years, what went wrong?
Right. Listen, just like with the internet, we tend to overestimate the near term and underestimate the long term. And I think, again, everybody gets euphoric. NVIDIA's up 15 times off the bottom. But think about this. Its earnings have gone from less than $1 a share to our forecast over $10 a share in 2027. So these are earnings-driven increases. But at the end of the day, if artificial intelligence does not produce the economic productivity we all think it will, the economic growth we all think it will, improvement in the lives of enterprises and consumers, then all of this stuff will come in, just like with the internet. If Amazon didn't deliver, if Google didn't deliver, then the internet wouldn't have been big. My experience living through 3 super cycles, right? Internet, social, mobile, and cloud, they all ended up far bigger than we thought. We're going through this digestion phase. I think digestion is good because that prevents the bubble that everybody was worried was forming. I don't think we're in a bubble. $20 billion for OpenAI is the fastest growing company in the history of Silicon Valley. Right. So we really need to catch ourselves.
But $1.4 trillion is probably the biggest ever amount spent from a company that's not profitable.
And one further point on the $1.4 trillion, I said half of that probably isn't even borne by their balance sheet. But think about it this way. If the revenues aren't there, I'm certain that they can extend and amend, right? They can adjust those CapEx commitments in order to make sure, as Sam said, to make sure that the CapEx matches revenue. Ultimately, that is all of the jobs of these companies. So don't get hung up on the $1.4 trillion. I know that's, that and the circular revenue chart,
backstops.
Is what everybody's focused on. I think that, again, I'm a buyer of the stock, not a seller of the stock, but I have a longer time horizon than most. I'm not looking at OpenAI over the next year. I'm looking over the next 5 or 10.
So you turned him down on whether you wanted to sell those shares when he asked.
Sam knows very well that I'm a buyer of the stock.
All right, I hope you're all doing well today and staying calm in this market. The Information published an article saying that the U.S. is to block the sales of scaled-back NVIDIA chips to China. I have no idea if this story is correct or not, and I'm hesitant to believe anything the Information reports about NVIDIA rumors given their track record. But even if this story is true, it doesn't really mean anything, as NVIDIA isn't allowed to sell any chips into China right now. Also, Jensen Huang said that there are currently no active discussions about shipping a Blackwell chip into China. NVIDIA has removed all China revenue from their forecasts, and it appears that that will be the case for the foreseeable future. The Treasury Secretary also said earlier this week that it would likely be 12 to 24 months before a Blackwell chip would be allowed into China. And my guess is that by that time, China will likely not want it anyway, as they expedite development of their own domestic alternatives. The good news is that NVIDIA's business is accelerating even without having any exposure to China. Now, I want to briefly talk about the market more broadly because this has been a very interesting week. I think the recent pullback we've seen in the market is due to a combination combination of multiple factors. Earlier this week, Wall Street executives spoke in Hong Kong, and they all agreed that a market pullback was likely in the near term, which spooked some market participants. There are also concerns about the government shutdown affecting the economy. U.S. challenger job cuts came in yesterday, notably higher than the previous month. The market is now once again wondering about the tariff situation as the Supreme Court case is ongoing to determine whether the administration's tariff policies are legal. We also had OpenAI CFO bring up the topic of government backstops this week. She later clarified that OpenAI is not seeking a government backstop, but the fact that the topic was brought up at all spooked the market. We also had the Financial Times report that Jensen Huang said China will win the AI race with the U.S. Jensen later clarified that he didn't say that, and that China is very close behind the U.S. He reiterated that half of the world's AI developers live in China, and where the developers go, those are the platforms that will succeed. And so all of these events and headlines have created an atmosphere of uncertainty and worry among market participants this week, at a time when the market was trading near all-time highs and ripe for a pullback. I would not attribute this week's red action to a single event. I think it's the combination of multiple events that have created uncertainty for market participants in the short term. While pullbacks may not be enjoyable, they are healthy, and this pullback has not changed the long-term trajectory of the companies that I regularly talk about on this channel, such as NVIDIA, Iron MP Materials, and so forth. I'm going to talk about NVIDIA in a moment, but first I want to address Iron and MP Materials because both companies reported earnings this past Thursday. Iron reported a fantastic quarter. I honestly couldn't have asked for a better report. I think some analysts are concerned about the potential risk of dilution moving forward, which is understandable given Iron's CapEx needs as they expand. But that is not a long-term deal breaker at all. And even if Iron were to do an offering, it would likely be similar to the recent senior convertible notes offering with the cap call transactions that essentially helped stave off potential dilution. It's also worth noting that Iron is trying to prioritize non-dilutive financing methods. Anyway, Iron announced that they are aiming for 140,000 operational GPUs through 2026. This is up from the previously announced 100,000 GPUs. So Iron originally guided to have 23,000 GPUs operational at their Prince George site in British Columbia by the end of Q1 2026, and that is still on track. Then Iron announced the contract with Microsoft for capacity at Iron's Childress site in Texas, and that deal brought the total number of GPUs up to 100,000. And then with this earnings report, we learned about the additional 40,000 GPUs that Iron will be installing at their two other sites in British Columbia, bringing the total number of GPUs up to 140,000. And notice that the data centers in British Columbia are already operational active data centers. Iron simply has to remove the ASICs used for Bitcoin mining and install the GPUs for AI cloud. I continue to be bullish on Iron for at least the next 1 to 2 years. Over that time, Iron will likely sell whatever capacity they can produce as the world continues to be compute constrained and power constrained in the face of extremely strong AI demand. Iron leadership indicated that they are seeing very strong demand from customers, including hyperscale customers. I would not be surprised if Iron announces deals with some of the other major hyperscalers in addition to Microsoft at some point over the next couple years. The 140,000 GPUs operational through 2026 will bring Iron's total energy usage up to 460 megawatts, which is only 16% of their 3 gigawatts of secured renewable power. This means that Iron has plenty of room for additional expansion even after the 140,000 GPUs. I encourage you to research Iron and consider it from the perspective of a potential long-term investment. Now let's talk about MP Materials. So MP traded notably lower in after hours after they reported earnings, and I'll explain why in a moment. And then MP traded notably higher on Friday. So let me very briefly go over what was positive and what was perceived as short-term negative from their earnings. Let me start with the perceived negatives. So MP's revenue for the quarter was lower quarter over quarter due to the decision to discontinue sales of concentrate and stockpile ahead of the price floor commitment going into effect and also ahead of the ramp of their refining operations. MP said that they expect NdPr production in Q4 to be relatively flat due to repairs and maintenance, which slowed things down. And MP also clarified that payments they receive from the Pentagon will technically not be counted as revenue because the Pentagon is not their customer for now. Instead, money from the PPA will show up as a separate operating income line item under revenue moving forward. I think this point of confusion spooked some investors. Now, let me briefly address each of these points, and then I'll mention the good from MP's earnings report after that. As for revenue being lower quarter over quarter, MP is stockpiling inventory, and so this was just a temporary decline in top-line revenue as they prepared for the price floor in Q4 and the ramp of their refining operations. As for Q4 NdPr production guidance being flat, that's due to repairs, and so it's just a one-time hiccup. It's not an ongoing issue. And as for MP not counting payments from the Pentagon as revenue, they're still going to receive payment from the Pentagon even if it is technically not considered revenue on the balance sheet due to accounting rules. It doesn't really change the fundamental situation. And so all of the perceived negatives from this report in my mind are not deal breakers from the perspective of a long-term investor. Now, let me quickly cover some of the good things we learned from MP's earnings. MP expects to return to profitability by Q4 and beyond, which is great. MP told us that magnet production is still on track to begin at their Independence facility by year end, and that will make MP the only rare earth to magnet producer in the entire Western Hemisphere, which is a big deal. And MP will still receive at least $110 per kilogram of NdPr, even if payments from the Pentagon are technically not considered revenue. Let's not miss the fundamental story, because we got distracted by an accounting rule, MP will still get the money from the Pentagon. The end result is essentially the same whether it's technically counted as revenue or not. The real moment to look forward to is late 2028 when MP's 10X facility is expected to begin commissioning. At that point, MP will have unlimited demand for their product from the US government for at least the next 10 years. And whatever they produce, they will sell. And the magnets that MP produces will be crucial to the oncoming wave of physical AI. Physical AI will likely be the largest wave of AI yet. And in addition to MP benefiting from physical AI, NVIDIA stands to benefit massively. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. NVIDIA is taking a holistic platform approach to physical AI and embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack today. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. Physical AI is one of the big reasons why I think most analysts continue to underestimate NVIDIA's long-term growth. For now, most analysts are hyper-focused on NVIDIA's data center business and not adequately factoring in growth from some of NVIDIA's other business segments into their long-term estimates. In addition to physical AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities in customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.